I'm here with Erik Triggs from Energy RMS. Erik, thank you for coming up to Emmitsburg today and helping us with our market outlook. During your presentation, you talked about some bearish risks to the economy affecting crude oil and heating oil supplies. Can you talk a little more about that?
So there are some very real bearish factors out there that have kept prices suppressed for the last year in general. Largely being, demand for both diesel and gasoline has been relatively suppressed. Gasoline because consumer spending keeps getting suppressed with rising consumer debt and high inflation. Diesel, our economy runs on diesel fuel. And with the Fed having high interest rates and all those types of things, trying to cool the economy, that has had its effect on diesel demand for the whole past year. When you got low demand on that in general can be bearish prices, which can send things lower. And then you always got the risk to the downside of the economy crashing. The Fed is fighting to cool the economy, but have a soft landing and not let it crash. But that's always a possibility. And even the stock market had a little scare here recently where some people were worried about that.
Erik, in your presentation, you also mentioned some bullish factors or risks to the market around the U.S. dollar, Middle East tensions, strategic petroleum reserve buying that the government's been restocking. Can you talk a little about those?
So I'd argue there's more bullish factors probably hanging out there. The Middle East, obviously tensions rising there. So we got to refill back up our strategic petroleum reserves, which we've already started doing and have a long way left to go. And we keep buying anytime when crude's in the $70 to $80 range, which we've been in multiple times. Yeah, the economy is a big thing. Like I talked about the economy being a bearish factor, the Fed is anticipated to start switching their policy and start cutting rates, which can spur on the economy. It can raise GDP, all those types of things, bring up that diesel demand. And I'd say, there's probably about 100% bet that they're going to do that in September here. And if that does spur the economy, it stakes off our potential of a hard landing type things, then that can be bullish energies going forward. Not to mention, worldwide, we're in a supply deficit from a worldwide perspective right now for the next quarter, which should bring prices up too.
Erik, you had some recommendations on heating oil going into the fall and winter. Can you talk a little about those and the why?
Being more bullish than bearish in my previous talks, my recommendation is fill your inventories first of all to get cheap diesel futures, what I consider, and diesel basis, which is typically cheap during the summer and winter, to protect yourself from maybe upwards of 40-45 cents run up combined for this fall.
And when you say fill tanks, you're meaning do it now.
Yep.
Do it here in
yep.
the next
do it
couple
here
weeks.
And now. Yep. And above and beyond filling your tanks, if you haven't contracted already, I recommend you do so just for this fall here for an area usage then. Because when I look further out than this fall, as we go into the winter, I'm anticipating prices start trending down. They seasonally go up into the fall. I'm a big seasonal person. I didn't mention that in my bullishness, but that's a big factor too. They seasonally head down during the winter, and projections are for things to track back this winter, which should give us another buying opportunity when you can fill your inventories this winter and contract for 2025 at that point in time. And a big thing that could spur that on is OPEC is talking about phasing out their cuts that they've been instituting in for the past few years, and that should add a whole lot of extra crude supply to the marketplace and add to that bearishness. And those are supposed to start late September and into October.
And just to clarify, when you're talking about contracting for the fall, after you fill your tanks, you're saying, hey, if I don't have enough storage on my farm and I'm going to use more than that this fall, you're saying get that locked in so you're not potentially facing higher prices when it's in season and in demand.
Yep. That's absolutely what I mean. Typically when you're looking at summer or winter, you always want to fill your tanks first because that's always going to be your best value before you do contracting.
Erik, I had one more question for you. I know you mentioned during your presentation that OPEC is considering rolling back some of their production cuts they've done the last few years. That kind of flies in the face of wisdom to me. Our price of crude is, call it in the mid 70s. It's down from the mid 90s over the last couple of years. Why now are they going to reduce or, put more supply back on the market at lower prices in front of potentially slowing economies?
There's a lot of things OPEC looks at when they do their production cuts. In general, it's easy to say they just want high prices. But what they also don't want is the economy and everything just crashing in on itself, where they end up with $20, or let's not forget negative crude oil prices like we got that one point in time. So they're eyeing low U.S. demand that's been here for a while. They're looking at the same things the Fed is. They're seeing terrible Chinese demand. That the real estate market's crashing there. You've got almost deflation going on there. India demand is faltering. All these are faltering, which means that that allows them to feel more comfortable adding in production. Plus, like every time they keep cutting production, they're losing market share to the U.S. and they can't do that forever. They want to eventually get back into the marketplace and producing.
Erik, during your presentation, you talked about some supply and demand factors for propane. Let's start with the bearish side of propane and kind of the slowing economy.
I would say there's less bearish side things on propane, somewhat similar to what I talked about with diesel, where we're already pretty cheap right now because of a lackluster last couple winters, really warm. Last couple of grain dryers were nothing. So prices are already suppressed. Inventories are super high. So in general, that's bearish things. And your threats of the economy and all those types of things crashing, that's what could send things lower in propane. But ultimately, you have mostly room for upside there.
So then let's flip the switch and talk about the bullish side of propane. What kind of factors out there are you seeing coming into the fall that's bullish for propane prices?
Like any trader, I like to buy low and sell high. And if we've had high inventories forever due to no demand across the board, the law of averages say that that's not going to be the case forever. If we have some grain dryer demand, or if we have a cold weather, and right now for grain dryer demand, I'm in the average to above average grain dryer demand in the U.S. category. If we have anything more than we've had these previous years, that likely adds some bullish pressure, especially when you look at overall prices. We're on the bottom end of where things have been for the last 7 years for prices. So again, I'm buy low, sell high. To me, when you're in the lower category, your downside price risk is more limited than the upside price risk.
Erik, having talking bearish and bullish factors, you put out some recommendations. Can you discuss those with us heading into the fall?
It's not that much different than diesel fuel from the aspect that's kind of buy. Number one, the best value, just like diesel to fill your tank, so is propane. That's the best value, is to get your tank filled. But some people have enough diesel tank to kind of get them through the fall or whatnot. Propane's not the case really for anybody for the most part, where they typically got to do a little bit of contracting above and beyond that, where I would say, fill your tank and then lock your price in for anything above and beyond that, which Pro Co-op always is going to have a contract value that you can lock it in for the entire winter.
Erik, thanks for coming to see us, and thanks for your time and input. As always, if you guys have questions, please reach out to Pro Cooperative and we will help get you the answers. Thank you.